Hello everyone, welcome to this week's weekly market view for Monday, the 18th of December to 22nd of December 2023. My name is Vishal. Let's get started. All right, so we're going to start off with the monthly chart on the Nifty, and let's start doing that from the monthly chart. And as we can clearly see that the monthly chart is still showing a lot of strength. In fact, the move on Friday was a very strong move, indicating that the bulls don't want to give up very easily, and they want to remain absolutely intact. So at least that is what the monthly chart is showing. Assuming that everything else remains the same, this is going to be the most, or rather, a very crucial level of demand on the monthly chart, which is close to around 19,800 odd levels. If you move on to the weekly chart now, and if you look at the weekly chart again, we have a strong follow through of 3 weeks, creating this new level of demand. So not really a good place right now to buy. So maybe we need to wait for a pullback or a corrective move. Not that the market is going to, come all the way to 19,900 odd levels. So we might have to go to a slightly smaller time frame. Let's quickly have a look at the daily chart here. And on the daily chart, we are seeing a little bit of consolidation today. The week has started a little bit on the negative note. Today, the indices, or rather, most of the indices are negative, but that doesn't mean anything as of now. And there is definitely some demand at the bottom. The closest fresh level of demand, we could consider this level now, this rally-based rally with a gap level. So there could be some unfilled orders sitting here, 20,700 on the daily chart. And we also have another gap level, which could be a little bit more prominent on the smaller time frames. If you go to the, let me check. If you go to the 75 minutes, yeah, we do see this level. So I'm going to mark this level completely over here. This is the level which is closest to current market price. 21,200 odd levels could be the next important support for this market. And on the resistance side, we do see that the markets are resisting around this 21,500 odd levels, right? So in case if the market does break the 21,500 odd level very convincingly, then I think the next stop for the market is going to be straight to the next round number, which is probably going to make a lot of the long-term investors very happy, which is the 22,000 odd level. So there's nothing in between as of now, but 21,500 might act as a stiff resistance for the market, which might lead to a little bit of consolidation before the market makes the next big move. All right, let's move on to the Bank Nifty now. So let's load Nifty Bank and let us see what Nifty Bank is saying. And let us see how some of the key levels for Nifty Bank are looking like. So if you look at the monthly chart, nothing much has changed on the monthly chart. A strong move to the upside, a closing above. The all-time highs would indicate more buying. And we could see that now this demand could be the next closest level of demand in case if the market closes above the all-time highs and sustains and remains above these highs. If you go into the weekly chart, no nearby level on the weekly chart. There could be something at this breakout juncture over here, but the closest fresh level on the weekly is 44,000 to 43,170. If we move on to the daily chart, let's look at the daily chart here. Yeah, on the daily chart, we do see these gap levels, and definitely 46,500 may act as a support. The next big level is 45,000 odd levels. It's still far away from current market price, so we might just see a little bit of consolidation taking place here. Okay. Let's move on to a slightly smaller time frame, 75 minutes. On the 75 minutes, this level will be a level to watch out for. Currently, pretty far away from current market price, but in case if there is a very healthy correction, markets could easily correct and then resume the trend to the upside here. So 45,826 to 45,504 on the Bank Nifty. Let's move on to the next chart, which is the Nifty Financial Services. We move on to the Nifty Financial Services. And look at that chart. Let's quickly have a look at that chart. Okay, we start off with the monthly chart. Pretty much very similar to the bank Nifty. So let's go ahead and mark this as the key level over here. 19,792 to 18,867. If we move on to the weekly chart, nothing clear on the weekly, but just like how we have plotted the level on the Bank Nifty weekly chart, this is going to be the closest level on the weekly chart of Fin Nifty as well. So 19,835 to 19,364. If we move on to the daily chart, again, nothing very clear on the daily. You have these gap levels, but because the market has, you know, overextended itself, so buying at those gap levels would not be a good idea, but definitely would look at these levels for long opportunities, which is 20,650 to 20,503. Again, more or less, this level is also coinciding with the similar level on the Bank Nifty as well. So these are your levels for Fin Nifty. Now let's move on to the USD INR here. Let's quickly have a look at USD INR. Okay, so all right. So if you look very closely here, market or the USD INR is finding it quite difficult to surpass this 8330 odd level, and the monthly chart pretty much is indicating that. If you look at the weekly chart, market was unable to sustain above this, did give a close, tried to close above, but then again failed. Today, the USD INR is slightly pushing to the upside, and that's the reason why you're seeing a little bit of a negative momentum on the markets. But now we will have to see whether the markets will try to push above this 83 handle. But now you can see very closely there are some key supply levels that are created on the USD INR. So obviously, in case if the USD INR does retrace, your first level of supply is going to be here, which is your breakout, and then you have this level over here. So this is your rally base rally 83.18 to 83.23. It'll be interesting to see if the market does get here into this supply. How does the overall index or how does the overall market react in such a scenario? Okay, so keep a close watch on 83.18, 83.23. At the same time, try to see where the Nifty indexes and the Bank Nifty index is lining up. Okay, pretty much broken out of the consolidation as well. Okay, very interesting. All right. Okay, let's look at the India VIX now. And let us see what the VIX levels are suggesting. Okay, so VIX has considerably risen today to 14 odd levels, which is interesting to see because we are approaching this 14.84, 16.04 handle, which will be a key level to watch out for because the VIX has, pretty much cooled down whenever it has come into this area. So it will be interesting to see. And if the VIX keeps on increasing towards 14.84, that could bring a significant pressure on the market. And that could also be another reason why our markets are a little bit jittery today and not showing the usual rally or, the bullish potential to the upside. Could also be profit booking as well. So something to watch out for, 14.84 to 16.04 on the India VIX. All right, we are going to shift our focus now from the indices straight to some of the heavyweight stocks. So we're going to have a look at Reliance closely, just for us to gauge where the market on Reliance is heading and is Reliance putting pressure on the Nifty in some way or the other. So let's look at the Reliance chart first. So Reliance has had a pretty decent rally to the upside. It's It's currently trading at 25, 29 odd levels. Now we are in an area which we have to be a little careful because we are in this area over here, which is this supply zone. This could break. I mean, I'm not saying that this could hold, but this because this is a weekly area, we got to be a little watchful. And if you look at the daily chart also, we are coming into this this area over here, right? So just overall, we just got to be a little careful because if Reliance is in supply and it begins to fall or begins to correct, then it's going to have its after effects on the Nifty as well, since it's the heavyweight stock. Okay, so just be a little careful on Reliance, and currently where Reliance is located, there might be some profit booking coming in. Let's move on to the next stock, which is HDFC Bank, and that is more or less the heavyweight on the banking sector. So let's quickly have a look at HDFC Bank. And as some of you might be observing that, we had discussed this level on HDFC Bank. This was that daily level. We had a fair reaction from this level. And after the price reacted, now it's again pushing to the upside. So it's making this supply weaker. But unless and until 1670 breaks, HDFC may not move towards the next level of supply, which is 1685 odd levels. So in case, even if the 1670 odd level breaks, the next stop on HDFC Bank will be 1685. And there is a new level of demand which is created over here, which is 1568 to 1540. So keep a close watch on Reliance and HDFC Bank for this week, as these two stocks could govern where the market is likely to move. I hope you all enjoyed the analysis for this week. Take care, everybody. Have a great trading week and see you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.